Hello and welcome to Increase Your Value as a Client Advisor, brought to you by CPA Practice Advisor Magazine and Wolters Kluwer. I'm Gail Perry, Editor-in-Chief of CPA Practice Advisor, and I'm your moderator today. Before we get started, I'd like to explain how CPE for this webcast works. Today's webcast qualifies for 1 credit of continuing professional education. If you plan to earn CPE for attending this session, you must stay with us for a minimum of 50 minutes. In addition, we will display 4 polling questions during the webcast. In each poll, you need to record an answer, as this is our verification that you are still watching the webcast. Please note that we can give CPE credit for multiple people at the same location. So if there are others in your office who would like to attend this event at the same computer, please have them join you now. And at the end of the event, we'll have you send us their email addresses for their CPE credit. At any time, you can enter questions in our chat area, which is the Ask a Question box provided on the left side of your screen. And our speakers will try to get to as many questions as possible during the presentation. Questions not answered during this broadcast will be addressed by the speakers afterwards via email. Today, we are joined by Michael Holstrom, Senior Audit Manager at Sachs LLP, based in the New York City area, and Stefan Davis, Lead Technology Product Management in the Audit Product Management team at Wolters Kluwer. And now we are ready to begin.
Hi, good morning, everybody. Thanks for joining us. Again, my name is Michael Holmstrom, CPA. I am a Senior Audit Manager at Sachs LLP. I am involved in the A&A practice, and I do a lot of data technology, a lot of data analytics. And what I'm going to help present today with Stefan is how tools can actually increase our value, not just as the auditor, but also as a client service.
And my name is Stefan Davis. I'm a lead technology product manager at Wolters Kluwer. I work with our audit portfolio of products. Many of you are probably using our products today. And Michael's, somebody working in a firm, is going to give us some of those real life insights from the trenches. So, in terms of session objectives, we're going to talk a little bit generally about how we increase value as a client advisor, and then talking about how we use data analytics to collect data, analyze data, uncover new insights, and present them back to our clients to add value. Michael's going to give some real life insights. And then we'll have a little look at the end, just at some data analytics technology, so you can see in practice how easy it can be to start getting those insights using data analytics. So let's start with client value. Why is client value so important? So, we're all in the audit market. Audits are becoming more and more commoditized. Generally, clients struggle to see enough differentiation between audit firms often. Clients are generally looking to cut costs. We are potentially on the brink of a recession. Clients, as usual, tend to often just shop around, see if they can find a better deal, see if they can get a cheaper audit opinion. We, as client advisors, as firms, we want to grow our practices. We want to take on additional clients. We want to expand into new services, and often those are advisory services, partly because of the commoditization that we're seeing in audits. We, of course, want to retain our existing clients. We want to continue to delight the clients that we have so that they look beyond just the fee that they pay at the bill at the end of the period that we're doing the audit. And, of course, we need to remain profitable. We don't want to contribute to this race to the bottom where we're just, cutting our prices to keep our business, eroding our margins and eroding the margins of the market as a whole.
Right. And just to interject with that, coming from the audit firm perspective, those fees are very important. There's a lot of competition out there, and we need to stay profitable. When we're doing our audits, we need to find ways that not only are we doing this client value add, but how are we staying profitable as a firm? And the increased use of data analytics and tools on the market are really helping us get to that proficiency level that we need.
Yeah. And often, in a client's mind, they're always thinking about the value that they get from the audit. So weighing up on one side, there's the value of the audit opinion, and we'll go into each of these in a little bit more detail. That's the core of the service that we're offering. But then we have the value of any other deliverables that we're providing, things like our management letters and any other reporting that we could provide. And then the other value that they get from us as client advisors. And they're weighing that up against the fee that they pay for the audit and the internal costs of serving the audit. You know, there's effort involved in providing the information that we need as an audit. It's in their interests and our interests to provide a simple audit, which is, you know, takes as little time as possible from the client's day-to-day work, and they'll be weighing those things up as they're looking at our bill each year. So let's move first of all into a polling question, and I'll hand you over to Gail to read this one out.
All right. Our first polling question is, to what extent is your firm considering the value you add to your clients through audits? And your answer options are: added client value is one of our most important considerations during an audit. Throughout the audit, we're actively looking for findings that can add value and put conscious effort into providing insightful reports. Where interesting findings come out of our audit, we try to turn them into value added through our feedback to management, or we really don't focus on added value. We try to deliver a solid audit for a good price. If you have any difficulty answering the question online, you can go ahead and post your answer in the Ask a Question box, and we will record it there. Once you've selected your answer, go ahead and click Submit, and that will send it through to our system. Okay, and we'll leave this up for about another 5 seconds or so to make sure we get your answer. And then let's send our results out to the audience. And interestingly, it's pretty much across the board.
Okay, pretty even. Okay. So let's delve into those elements of that value equation a little bit more. So the audit opinion, the kind of the core deliverable as part of the audit, what value does the client get from the audit opinion? So in many cases, there's a legal requirement. You know, the value is not meeting their legal requirements. But in terms of additional value, the audit is fundamentally adding reliability to those financial statements, and it's really for the purposes of assurance of stakeholders, so shareholders generally. So there's value in that because the business wants to make sure that the shareholders, the people who are funding the business, the people who own the business, are happy and satisfied with the way the business is going. But where it starts to add more value is when you're starting to get external parties involved. So maybe you're looking to sell the business, maybe you're looking to bring on additional financing. If you're trying to pull new financing into business, then they'll often be looking for audited financial statements, and often for a number of years back. So there's an immediate value add there. And the other reason that it actually adds value to the business is when you're selling a business, the business is generally going to be valued on some kind of multiple, maybe of EBITDA, and then they'll multiply it by a price earnings ratio to give you the value of the business and maybe add in the free cash to the business. That figure is going to form the basis of the valuation of the business, and they're going to chip away at that. We call it deal chip. The price of the business reduces based on the risk that they see in the business. So by having audited financial statements, that reduces the level of risk perceived by the buyer or the financier, and can actually increase the value of the business as a result of that. So, you know, as client-focused advisors, if the client's looking to raise finance or sell the business, then we want to be helping them to get ready for an exit by helping to increase their EBITDA, minimizing then any perception of risk by having nice, clean financial statements, and obviously helping them to improve their cash flow as well. So they've got cash in the bank as well. Yeah. And the other thing that it gives is to the management of the business. You know, the general manager or the CEO of the business isn't necessarily involved in the day-to-day financial numbers. You know, they take the reporting that comes from the finance team. Having that reviewed by an auditor can give him more comfort over the validity of those figures.
Right. And just to add to that, you know, as you state here, as the auditor, we gain all this information, all this knowledge throughout our audit process. And ultimately, all we provide at the end of the day is a sheet of paper. Yeah, you have a clean audit opinion. Here we go, ready to move on. But what can we add to that client value? How can we add an additional service? Because they pay us a lot of money for these reports. And all that data that we gather behind the scenes is exactly what they need to see sometimes. And as you mentioned, the people at the top don't always see the numbers going in. They just see the final results at the end of the day. What we're able to provide when we do some data analytics, some additional analysis behind the scenes, there's something else there to present to your client during your board meeting. You can lay out to them, hey, did you know that you're paying vendor XYZ this much? Because they don't see all that information. We get to see that. So we get to bring some additional information to the table to add that client value. Somebody asked the question, what do you mean by commoditized with our audits? Nobody wants the audit. Nobody wants to pay for that audit. So let's give them some additional value. Hey, that 50 grand, that 60 grand you just paid me for this piece of paper, look at all this other stuff that we're going to show you that's going on behind the scenes. So now you're aware or more aware of your business.
It's like when you get your car serviced. Nobody wants to get your car serviced, but when they valet your car and it's nice and clean and and they've hoovered they vacuumed the inside, that's the added value which keeps you going back to the garage and maybe paying a little bit more for your service. So let's go to the main other deliverable that we sometimes provide as part of our audit, which would be the management letter. This is where we typically put all the other things that we think are of interest to the client on top of the audit report. So in here, we can include things like risks that we've identified to the business, maybe risks that the business doesn't know about, any control weaknesses that we've found through our work. Maybe we've identified some just processes that are inefficient or are not operating very effectively. So we can provide feedback on those. Maybe we can identify just opportunities for managing the business better, maybe financing the business better. Identifying instances of fraud. Businesses are busy doing their day job. They're not necessarily looking for fraud. We're not necessarily looking for fraud. We do some procedures which do some element of that, but where we do identify instances, that's real value back to the client and can stop them hemorrhaging money. And then it's other issues like, we might identify problems with contracts, dependencies on key staffs or key customers or suppliers, which the client just hadn't kind of considered in the same way as we do in an audit.
All right. And in this management letter, let's be honest, our clients are never excited when they get the management letter. All it's doing is identifying the issues that we've found, and nobody has issues, right? Everybody's perfect. All our clients are perfect. But it's an important item to give them. And a great example, I just did a journal entry test yesterday where we identified the year 2031 in the journal entry postings. I thought it was very important for my client to know, hey, whoever's entering the data in the GL is putting future dates that don't exist. You have a control weakness. You have to correct this issue going forward. They don't want to hear that, but it's important that they hear this information. And you're not really going to identify that if you're just scanning it, up and down with your arrows. The data analytics, the tools provided, allowed me to identify that because I set parameters around that information.
Yeah, and often it's a case of like with your boss, don't come to me with problems, come to me with solutions. So if you can word your management letter in such a way that you are not only highlighting the things that are problems, but giving them a route out, and we'll talk about this later, but there are ways that you as a firm and as advisor can help them also to resolve those issues. And then there's other ways that we deliver value. Just the value of the relationship that the client has with you, the ability for them to phone you up as their trusted advisor, leverage your expertise. As a business, and many owner-managed businesses have been in that business for many, many years and have probably never worked in another business in the same market. You, as the auditor and advisor, see multiple different businesses in similar markets, similar industries, and can provide a much wider perspective on their business than the business owner can. Obviously, one of the things that we do is being able to advise on accounting treatments, better ways to treat various different situations so that they more positively impact results as well. And obviously we can, as we said before, help them get ready for a potential sale as well.
Right. And how we've done this in the past with our clients, housing information, because when we do our audits, we get a lot of information and amongst many clients, many industries, but we build databases, background that allow us to do benchmarking. So when our client is coming to a situation of a potential sale, or they're just curious how they're comparing to the market, we have information where we can benchmark and show them from an analytics standpoint. Here's how your G&A is compared to the rest of the market. Here's how your sales, your profits, etc. So it's great information to be able to provide. Once you learn how to start to silo your data, it's great to be able to present this back to your client and help them in these types of situations.
Yeah, and benchmarking is really valuable. It's something that's really difficult for them to get themselves, but your unique position as an advisor across many different clients, you're in a unique position to provide that information. So where does data analytics come into all of this? So thinking of those things that we've just talked about, ways that we as auditors can add value, data analytics can provide information to provide each of those value points. Data analytics contributes to giving a robust audit opinion. Data analytics can help you to find control weaknesses, system issues, and inefficiencies. Journal entry testing, for example, is a good example of where we're looking for fraud, instances of fraud. Identifying risks to the business. Our risk assessment process should be considering risks to the business within the business and in the external environment. And data analytics as part of the risk assessment can help to flush out risks that we haven't maybe thought of. Identifying other issues in the businesses. And then in terms of adding value, data analytics, and we're not really focusing on efficiencies of data analytics in today's session, but data analytics can allow you to get the audit done quicker, potentially allowing you to reduce your fee or be more competitive in the fee that you offer, but of course being more profitable as well. And there's a lot of ways where doing tests using data analytics can be less impactful to the client than one of our traditional procedures. And we'll talk about that in a little bit more detail in a moment.
Yeah, absolutely. And we will talk more about that. And that's one of my favorite things to talk about is doing more work by doing less work. And we'll explain that shortly, what I mean by that. But a great example, when I do a journal entry test now these days, I review 100% of the general ledger. I'm not looking at the manual entries. I'm not sitting there scanning and testing a random 30 to 40 items. I'm doing a risk-based approach when I view my entire general ledger. And it ends up resulting in about 30 seconds of actual data prep and about 10 minutes of data review with test results. And it's just fantastic. Huge time saver, allows us to be a little bit more profitable on our audit costs.
So we're going to throw it back to you with another polling question. We'll hand back to Gail.
All right, thanks. We're ready for polling question number 2. To what extent are you using data analytics in your audits? And the answer options are: we are using analytics on every audit in numerous different areas. We have employed analytics for limited key procedures, for example, journal entry testing. We're using analytics in an ad hoc way, or we're not really using analytics in our audits. So please enter your question here and then click submit. Or if you don't see the pop-up question box, you can enter your question enter your answer in the ask a question box. And while we're waiting, let me just mention a couple things. On your screen, there's a place that says total answered questions. This does not relate to your polling question. So don't be confused by that. That relates to if you asked us a question and then we replied to it. So you can ignore the total answered questions option. And also on your screen in the event resources section, you can download the slides for today's presentation there. All right, so I think we're ready to go ahead and push the results for this question.
I can't see those results, Gail. Can you give us a quick summary of what we've got?
Yeah, I can. Let's see. Okay, and it looks like about 45% are saying we're not really using analytics in our audits. Mm-hmm. And the others are using it at different levels.
Okay, perfect. Okay, so let's move on into where in the audit cycle can we use data analytics to deliver more value to our clients. And we often think about data analytics as like journal entry testing and sampling. It's the substantive test of details area, but really data analytics can add value throughout that entire audit cycle. So from getting data, and we'll get into examples of each of these, some really great examples, we can actually add value to the client through just the process of obtaining their data and preparing it into a format that can be used. Taking that data into the risk assessment process, performing risk assessment analytics, controls testing, even if it's only kind of doing walkthroughs, we can add value through that process, through the substantive analytical procedures, substantive tests of details, and the way that we present information back to the client. We can use data analytics to make it more engaging, more useful to the client and easier for them to understand. So let's step into each of those examples and give you some examples of how we can do that in real life. So typical examples of the types of data that we would get on an audit, the core list. Michael, I think you gave me this core list when we spoke before. Your general ledger and your trial balance are your number one and number two pieces of data that you need to support the audit. And then we'll be getting things like our AP and our AR aging, our register of invoices, our cash disbursement register, our inventory register. And then beyond that, it depends on the type of client you're auditing. There will be particular reports that will be specific to that client industry or the areas which are material or important to the audit. So how do we add value through getting data? I mean, it doesn't really seem like the sort of area where we'd normally be adding value, but by making it as simple for the client as possible to provide that data, we're adding them value. We're reducing the impact of the audit. Often we can connect directly to their accounting systems, especially the cloud accounting systems. They're very easy to connect to, and most pieces of accounting software will tap into those. Allowing the client to not spend ages wrangling the data themselves, but just provide us the data in the format that's convenient for you. And then we, as the auditor, will wrangle that data into the format that we need. Now, an area that can really add value is providing that data back to the client. Often our clients will send us a report. They've never run that report before. They've never seen that report. They may not be aware that this sort of data exists in their business for their own internal purposes. So being able to provide back the data that you've cleaned and you've massaged into a useful format can provide value to them, and they can use it internally. And maybe we can even give them the tools to use themselves to make their own data better internally. And Michael, I think you've got a fantastic example of this one.
Yeah, I do. And this is actually great information for that 45% of people who said they aren't using data analytics yet. And I think a big part of that problem is getting information. And as you mentioned, yeah, there's connectors where you can pull down information to the system. You could run it. A lot of times you have smaller clients, though, who their information isn't quite finished yet. There's some audit adjustments that have to go through it. But what we've done, and what I've really helped one of my biggest clients do, is take raw data from a PDF. And the voucher is a great example of this. I had a client who primarily dealt with Section 8 real estate, and they would receive 11,000 vouchers a month for all of their different projects. This was a by hand process because they were getting mailers. They didn't know how to take this information and put it into a usable format where they can convert everything over. With the use of Teammate Analytics, with the PDF to Excel function, I was able to do a data scrape of the information, bring it into a structured format, and then create a macro workbook behind it. I took a process that my client would spend, we'll call it 2 weeks roughly, putting data, massaging data into Excel. I trimmed that process to about a half a day of work because all they had to do was create a template, drop in the PDF, run it through, and bring it into the macro workbook, and they were done. It resulted in my benefit because I got a nice fee for additional consulting work. But their bigger benefit was they were now able to reassign the 3 people that were doing this over a 2-week process to different parts of their business. So this value add to them was they didn't mind spending the $50,000 because they knew back end they were going to be saving hundreds of thousands going forward.
And that's the sort of work that you can do for an audit client because it's not advisory as such.
Correct.
No limits on that. This is not an example of the exact voucher, but just to illustrate kind of how that process works. I mean, this is an example of what a credit card statement might look like. And there's loads of data in here. We've got data, at the top of the page, we've got things like the account number and the name and the payment due date. that's important information. Then there's the transactional detail, which is kind of in the middle box, and then there's totals at the bottom. All of that information is really useful, but it's really, really hard to get hold of. Sometimes you can be lucky and you can copy and paste from Adobe into Excel, but it's still in the format that it was in the original credit card statement. That's almost useless to you. With a tool like the Import Wizard, which in Teammate Analytics, you define how this file looks, and that's a very simple point and click process. And what it spits out is, and this is the exact same data that came from that previous screenshot, it's now in a format that is good to go straight into Performing Analytics. And when I mentioned that, we can pass that back to the client, we can give them the data that we've wrangled, but in the example that Michael gave them, we'll give them, I think you managed to get them to buy Teammate Analytics in the end. So they could use the tool themselves to do what you as an auditor did to get the data processed, and they can just use it every day.
Exactly. Yeah, we were able to, once we showed them what we can do, they went out and purchased the product for their staff because they saw the added value. Retained us as well because I still had to help them create the templates. From a data perspective, I was able to show them how to transform something to something. So I still was, participating in that area, which again, from a consulting standpoint, nice added value for our bank,
Yeah, exactly.
It's fantastic information to be able to provide back to them.
Yeah, definitely. So then the kind of the first piece of data analytics that we typically do in an audit is risk assessment, being the front end of the audit. So what do we do in terms of analytics? Typically, we'll look at trend analysis. We'll be able to do things like ratio analysis. Those are things that you might think that you're doing today, doing a this year versus last year, calculating your ratios, what's this year's ratio versus last year. But then when we start to do things with data analytics, we're not just taking the trial balance at 2 points in time. We can take the whole general ledger and map the trend monthly. We can take 3 years of general ledger or 5 years and see not only how is these 2 points in time comparing, but what is happening to this business over time? How is this business evolving over the last 3 years, for example, 5 years? Are we growing? Does this year look great, but still is there a downward trend in the business? Those are things that you don't see when you're just taking that very specific view. And often, the numbers at the end of the year can look very different from how they look in the middle of the year. Then ratio analysis, again, you can do that ratio analysis on a monthly basis to see really what's happening to our working capital ratio over time. Is it declining? Is it similar? And another just technique to add into here is what we call account flow analysis. And it's taking things a little bit deeper, but still keeping them at kind of an overall view of things, but not just understanding the values that are in each account or each grouping within the financial statements, but how things are moving around within the business. So when I look at revenue, for example, I can look at all of the postings that have hit revenue and where's the other side gone. I would expect the other side in most cases to be in accounts receivable. This is where you can spot strange flows or unusual things happening in the business, which might influence your risk assessment and the way you conduct the audit. So again, how do we add value to the client through this? Well, you're thinking about the risks to the client. They should be thinking about the risks on a regular basis, but you're maybe thinking outside the box. You maybe have a better understanding of the wider market. You've seen things in other clients that might impact this client. You might be able to educate the client on risks that they haven't considered before, or they're not actively managing, or they haven't thought about a solution for. We go back to the risks of fraud. We can do our journal entry testing right at the front of the audit, and this is something I like to advocate is don't leave it to the last minute, because if you leave it to the last minute, it's just a tick box exercise and you're just trying to get answers for it. If you pull it right to the beginning of the audit and using a risk-based approach, what Michael was talking about, you can really start to identify unusual things that are happening in the business and use that to drive your audit. So you're focusing on the areas that are important, and often you can spend less time on the areas where there's lower risk. And the other great thing about the risk assessment and the point of the risk assessment is you're really starting to understand the business, not just in a total level, but what's happening to inventory, what's happening to receivables, payables. Everything you understand about that business gives you more opportunity to tell the client and apply your knowledge from other places to give them information that they didn't have before, and that's all valuable stuff.
Yeah, and while we're talking risk assessment, from an auditor standpoint, this is the most important part of the audit. Planning and our risk assessment, because we have to make sure that we have planned our audit properly. Having access, and listen, they always provide a general ledger and a TB and some sub ledgers up front, and we can go through a typical risk assessment with the information they provided previously. But having data access to everything and actually having sortable data allows us to do that journal entry test multiple times, because if we get something in September, October, when we start our planning process, a lot of times you don't want to double duty a job because you're spending too much time, and especially the old way of doing journal entry testing where you have a staff scroll through thousands of pages of general ledger and randomly pick something to test. We're now looking at that actual sortable data, and I can start to really drill down on my risk assessment. I can start to look at maybe some of the control functions that I wasn't necessarily keen to before, but seeing what's going on in the general ledger now more detailed, I can hone in on things and design my risk assessment and plan my audit so much better. And then as we work through it, having tools that make testing of these items so much faster and efficient, I don't have to just do it once, as Stefan said, at the end of the audit, and all of a sudden I'm identifying these things. I can run this 2-3 times as I progress through my audit to make sure that there's nothing else that we're finding. And as we progress forward, our planning is still good. Our risk assessment is still good.
Okay, so going on to controls testing, you're probably going, we don't do controls testing. But the various different stages of controls testing, understanding as a walkthrough of the transactions, testing the design of controls, testing the operating effectiveness of controls. This is a real mine of useful insights if you're taking a controls approach. I know we don't often perform a lot of detailed controls testing on smaller audits, but there is a wealth of information there if you do. Helps you to identify situations where there are inefficiencies, even just the walkthrough process. When you're walking through and you go, well, why does it double back, and why does it go to this person and this person and this person and this person? Those are all useful things for the client to understand. Your management are probably not aware of the process that goes on in your credit control department, but by doing a walkthrough, you could often find those strange activities. Identifying areas where there are missing controls or controls that are not designed effectively, where there are segregation of control issues. And then in terms of testing operating effectiveness, and again, I understand that's not something that's often performed with smaller clients, but instead of just testing a sample, you can test 100% of the instances of that control operating. So, if there's a control that a manager's supposed to sign off every invoice in the system, you can run a report of every invoice and the person who signed it off. You've instantly 100% tested that control. If you're not testing control, then you'll often find that the substantive procedures that you perform, when you find an anomaly and you go to find out what the cause of that anomaly is, it's normally a controls issue. There's an absence of control, or there's a control that's not operating properly. So even though you're not necessarily testing controls or taking controls approach, you can still pull out those control insights in your reports to management.
Right. And as you stated, as an auditor, I deal with a lot of smaller shops, mom and pop shops, I like to call them. And they don't have a robust accounting department. They don't have 100 people with all the segregation of duties. So it actually becomes a little bit bigger of an issue as we go through some of the substantive testing, like you said, journal entry testing. But even bigger to me is the cash disbursement cycle, because what your owners would like to see, sometimes they're bombarded with 1,000 invoices at the end of the month and just sign. Yeah, get it out. Let's make our payments. Having the use of a tool that can extract the information and present it, and this is part of that client value, is at the end of the audit, I can bring to them a disbursement cycle, visualized, categorized by vendor, by trend. Did you know you're paying vendor XYZ, every month? And it's an eye opener sometimes, because I didn't even realize I pay that vendor. Why am I paying them so much? So that kind of helps with the control process, because all of a sudden they're now jumping back to their process and seeing, why are we approving these invoices? And again, it just becomes an eye opener for the client to see this at the end of the day.
Yeah, and another source of eye openers is is definitely the analytical procedure that we're performing. So similar to what we do in the risk assessment process, when we're doing a substantive analytical procedure, often we're validating something that's financial against something that's not financial, or using historical data to validate what's going on in this year, or taking a benchmark from somewhere else and using data analytics to pull those all together to perform our analytical procedures. So, how does that add value to our clients? We're generally looking at the business in a way that the client hasn't. We're trying to get proof that revenue is reasonable by maybe looking at number of shipments, or you can take the number of parcels delivered through your courier as a way of validating the revenue change in the year. That's probably a way that the client hasn't looked at the business themselves. You're probably going to find things that they haven't even thought of looking at it that way. And those anomalies you find, again, process deficiencies, errors, frauds, the client may never have identified because they don't look at the business in the same way as we do as an auditor. And Michael, I think you had a couple of examples of situations where you've seen this in practice.
Yeah, absolutely. And I'm going to hone in on the real estate. With real estate, I deal with a lot of Section 8 housing. So your income is kind of fixed. You can automatically test that by doing a recalculation of what your rent revenue should be. So my risk is not necessarily the revenue, it's the expenses. If they want to show profits, where can they show those profits? By understating their expenses. And what we've designed with the use of analytics is a per unit per cost situation. We're able to go through a whole entire worksheet of breaking it down by cost per unit. And we look for those fluctuations. We do a trend analysis over years to see what, from each category of expense, if it's gone up, if it's gone down, and why. Now, not only is this a great audit tool and allows us to have a fantastic substantive analytic over our expenses, but like you said, at the end of the day, I bring this back to my client. And I say, did you know that your water expense, year over year, it's gone up a little bit, but you had a lot more vacancies this year. So why did your water usage go up? And it helps them identify, maybe there's a leak somewhere. Maybe there's something else happening that we're unaware of. And as you said, there's financial and non-financial. And these are situations that sometimes they just become big eye-openers for your client. Once you show them that detailed level of analytics about what's happening within a side of it they maybe not be looking at, it just wakes them up and like, wow, I had no idea that was going on.
Yeah, exactly. And then we'll wrap it up with substantive tests of detail. So the things that come into here, journal entry testing is effectively a substantive test of detail, but again, I like to perform that early in the audit as part of the risk assessment process. We're trying to replace sampling with verifying 100% of the transactions to supporting evidence where we can, and that's where data analytics can allow you to do that. So your coverage is much better, and often it's much more efficient. How long does it take to take a sample of 50 and then go and vouch that back to things that are in the system? Often you're sitting down with a member of staff and they're showing you the transaction go through the system. It's in the system. We've got the data. We can do all of that with data analytics in many cases. Another good example is being able to audit from the detail rather than the summary. So when we get AR, we'll probably get the AR aging report from the client. And I know when I was an auditor, we'd pull that down and we'd start scanning through and we'd start going, oh, what's in that over 120 days, that big number there? What's in that? And then you go back to the client and then they pull your spreadsheet off and they'd send it back to you and you'd have a conversation. When you're creating that AR aging yourself using the transactions, it's a double click and you're straight into it. You can see exactly what it is and you can say, okay, show me that invoice. You're cutting multiple steps out of that review process in the audit. And, there can be significant savings just through being able to self-serve answers or, another step towards the answer without having to go back to the client. So again, the benefits again are the same as we talked about previously. Fraud, anomalies, indications of badly designed processes or processes that are not being followed properly, and being able to have a lower impact audit because you can self-serve.
Right. And this kind of goes back to what I said in the beginning. We're going to do more work without doing more work. Great example here is the cash disbursement cycle. The old way of doing cash disbursements was I need to pick 25 and I'm going to take their ledger. I'm going to throw a dart at a board, randomly pick 25, and that's my test. If nothing happens, nothing happens. If I found something, I'll test further. I don't need to do 25. I may not need to do any, because what I can design in Teammate Analytics, when we run our testlets, I can actually design it to do a Benford's analysis over the entire population and designed to look for risky areas. Then I can hone in on those and see, okay, yeah, they had 12 payments to BMW. Who cares? That makes sense. They've made 12 payments to a car company on a monthly basis. Completely makes sense. But if you found that 13th, and that 13th happened to be $10,000 more than the other 12, hey, maybe I found something here. Now I'm testing one item, not random 25, and I'm testing with purpose. This is that risk-based approach we were talking about. Your data analytics allows you to run 100% of the information and really hone in on a specific instance that may be, and I hate to use the word fraud, but maybe fraud, hopefully error, but maybe fraud. But again, this is something that you probably would not have found by randomly testing 25 items that took you an hour to vouch. I spent 6 minutes and I already found something super important that I can now bring to my client. I can test, and I've completed everything I need to by the standards and provided a robust audit product.
Yeah, that's real. That's good value add. And when we come back to presenting all these things that we've talked about back to clients, like Michael says, no one wants to look through a list of things that's wrong. Visualization, which is another part of most analytics tools, is a really useful medium to present that information back to clients. And there's just a couple of examples here. Just being able to visualize what's happening to revenue, being able to use predictive analytics as well. But the cutoff example that's on here is a really nice illustration. It's like trying to explain why you want to look at transactions around the year end to a client is, okay, fine, some of the auditors want. But if you can show them a graph like this that says, yeah, we've got a massive spike at the end of December and then a massive drop in January. Are you sure that there's not some misallocation of these? And, just simple findings, being able to show those to the clients in a way that's visual. And you can obviously use those visualizations to understand the data yourselves and perform the analytical procedures. It's just much better than looking at tables and tables and lines of data. So, again, how do we turn this into value for ourselves? Every insight that you have in the audit has a potential for an advisory offering, subject to the restrictions we have for being able to provide advisory services. So, the mitigation of risks, being able to advise on upcoming accounting changes that might impact the business based on what you understand about the business, control issues, inefficient processes, frauds. I know, many firms offer fraud investigation services. They'll use the same analytics tools to really delve into frauds and understand the scope and the scale of them. Strategy consulting, being able to help with mergers, acquisitions, sales, financings, and so on. But really thinking about it from a perspective of not only providing value to the client, but providing value to you as a firm, because you can help the client to overcome any issues that you've identified. So we're going to skip to a penultimate polling question. Gail, I'll pass that back to you.
All right, thanks. This polling question, this is our third question, is to what extent have you previously turned the use of data analytics into value add for your clients? Your options are: our use of data analytics regularly delivers additional added value to our clients. Data analytics is often a source of added value for our clients. There are a small number of times where our analytics usage has led to value add to our clients, or we haven't really delivered any added value to our clients through the use of analytics yet. So please choose the most appropriate answer and click the submit button. And again,
I think I must have purposely worded these questions to make them difficult for you, Gail. I apologize.
My mind is switching these completely. And then just as a reminder, if you have any trouble answering this question online, you can put your answer in the Ask a Question box and we will record it there. Okay, and just a few more seconds. And I think we can go ahead and push our answers to the audience. It looks like about half are in the bucket of they haven't delivered added value through analytics yet. So prime candidates for the information you are offering.
I hope so. Okay, so we're just going to wrap up. We got a couple more minutes left just to talk a little bit about Teammate Analytics. We've mentioned a lot of the ways that Michael's used it in practice for supporting this kind of data-driven audit using data analytics. So some of the key things to pull out here are the ability to import the data, the ability to automate your data analytics. So things like journal entry testing is something that every auditor can do using automated routines. It's very easy to do. It's a tool that is really designed for regular auditors, not data analysts. All the areas we've discussed today, risk assessments, tests of detail, analytical procedures, controls testing, fraud, sampling, visualization, all of these different areas can be performed using Teammate Analytics. And I'm going to give you a very quick flavor of what the tool looks like now, just in the last 5 minutes before we have questions. And if you do have any questions, please do add them to the question panel, and we'll make sure we have some time at the end to answer some of those. So I've got very limited time here. So just to give you one very quick example, Teammate Analytics, the tool you can see, it sits on top of Excel. And the benefit of that is that it's a familiar tool that every auditor can use alongside the Excel that they're using every day. So within here, the import wizard is where Michael was talking about that data wrangling, taking those PDF files, and we can take a whole batch. You can load up 100 PDFs, click the button, and it will standardize them all into a nice, simple format that you can use. When we were talking about things like journal entry testing, that's where the expert analyzer comes in, and you'll see within these TAs at the bottom, these are workflows that come with the tool. So we've got them out of the box for general ledger journals, payables, receivables, revenue is a new workflow that we've just added recently, which delves into really understanding and more an analytical procedure level what's going on in revenue. And from a risk perspective, from a client value add perspective, that can uncover some really interesting things for you to play back to your clients. But I just wanted to show you, very, very limited time, a very quick example of how quickly we can take some data and we can get something useful out of it. All I've got here is a daily listing and the amount of revenue we've booked in each of those days. So I'm just going to hit my visualize button now. That's going to load up my advanced visualizer tool within Teammate Analytics. It's going to automatically create our chart for us. Let's say we want to look at the daily revenue. So I'm going to say I want to look at revenue, total up the revenue. I want to look at that based on the date. So that's going to automatically set my chart up for me. And we can also play with this because this daily view is nice, but it's a little difficult to read. So let's start off. One of the examples in the slides I showed was grouping this by month. So if we wanted to have a look at how does revenue trend over time, we can see straight away that there's a bit of seasonality going on in this business. Our revenue is relatively high at the beginning of the year, dips down over the spring and summer, and then spikes back up again on the run up to the end of the year. So as a business, I'd want to understand, does this match the type of business and the way it conducts its business? And I've also actually pulled in 13 months worth of data here. So you can see we get quite a big drop off in January. So let's have a little look again. We'll go back to looking at that on a daily basis. And when I look at the end of the year, I can see a bit of a spike there. So let's say we want to use analytics in our cutoff testing. If I switch this to let's just look at the last month of the year. Let's look at December to January when we'd normally be focusing on for cutoff testing. Whoops. So I'm just restricting the range of the date of the chart here just to show us the last month and the first month. Okay, so that looks interesting. We've got this big spike at the end of the year and then a massive drop in the beginning of January is very much lower. So I would want to now drill down on this data. And we can drill straight down on the data from here. Let's say I want to look at the last 5 days and the first 5 days. Maybe that's how we want to do our cutoff testing. We can do our multi-drill down. We're straight into our sample. These are all our invoices from the end of the year. We can go and validate, make sure that those are assigned to the right period. That process of just identifying that as a risk, identifying the transactions that we want to test, and providing that back to the client, it can take quite a bit of time using traditional methods. So just as simple a test as that, pulling the visualization up, looking at it in a graphical form, can take you straight to some insights. But yes, that's very much just scratching the surface of the things that we can do in Teammate Analytics. The other thing I just wanted to point out is we often get the questions like, well, how do I know what tests to perform? How do I know how to use data analytics? And this is where our test library comes in really useful. There's 200 tests in here, covers substantive tests, controls tests, analytical procedures, and they cover all different areas of the audit. So let's say I'm auditing payables and receivables, purchases and payables. You'll see various different examples in here of different procedures that we can perform. And also within here, we've got the accounting assertions that these tests help us to test as well. So when you're looking at ways to test those different assertions, there's some useful information that we added in there recently as well. So that's very much a very quick flavor. But yeah, Teammate Analytics is a really useful tool, very comprehensive, but also designed to be easy to use so that any regular auditor can perform them without having to be a data analytics expert.
Right. And if I can add to that, a big tool that we use is the Expert Analyzer. And what that allows us to do, we can custom make tests or testlets, as I like to call them, for our audit procedures. So when I do a journal entry test, I'm not just looking at one series of information. I'm designing a testlet that has 15 different tests within it. And again, it's the same process. It takes a minute to run. I have my first year associate people doing it because it's click the button and go. And what it's giving me back is tabs of great information, all at a risk-based approach. Same thing with the disbursement testing. I'm not just doing a disbursement test. I'm doing a plethora of tests over that disbursement cycle. And I'm able to see so much information. And again, at a click of a button. Once you have a methodology down, once you have a process down and a test built, or I like to call the module built, it takes a minute, if even that long, to run this, and you're getting so much detailed information out of it.
Yeah. We get fantastic feedback from clients on how easy that is to do. So we're going to have one more final polling question, and then we're going to move into questions and answers. I know that we've got some questions sitting in the Q&A. Hopefully we'll have a time to get through a couple of them. If we don't have time to get through your questions, then we will respond offline as well. So Gail, could you take us to our last polling question?
Absolutely. Our last question is, would you like more information about the technology you've seen today? And your answer options are yes, we're considering purchase decisions within 12 months. Yes, we'd like to prepare for future decisions. We're not purchasing now, but like always, we want to improve workflows, but we'd like ways to improve workflows. But I'm really reading poorly today. And the fourth option is thanks, I attended for CPE only. So please choose whichever of those is appropriate to you.
I think we can leave that up as we just have a little look through some Q&As. Is that okay, Gail?
That sounds perfect.
Okay, so we've got a couple of questions here coming through. And I'll ask them, Michael, see if you've got any views on here, and I can answer as well. We struggle to get data from clients, so we can't really perform analytics. Do you have any tips for this?
Biggest tip I can tell you is what happens a lot with systems is they will export these sloppy looking Excel files, thousands of columns that everything is merged and it's just nonsense. Have them send a structured PDF. This PDF converter tool in Teammate Analytics has saved my audits. It's just, I take the information, I structure it now the way I want it to look. And just, it's a huge time saver.
Yeah, and I think clients just often they struggle because they've never done it before. You say, "Give me a general ledger listing," and they're like, how do you do that? There's every accounting system has a standard report for general ledger downloads, journal entry downloads. Sometimes you might need to sit and hold their hand a little while as you go through it, and often they're using systems which you see across multiple clients. And there's often, even just a simple online search can help you to get to provide some information to them to help them to run the report that you need. But yeah, as Michael says, we don't have to worry so much about the report. an ugly report is normally fine because we have the tools to be able to make them into something that we can actually use effectively. And the client doesn't always realize that. They go, well, I can produce this thing, but it's not going to be useful to you. Actually, yes, it is. Even those dot matrix printouts on the green and white liney paper, those really old legacy systems that can only print to those printers. You can print to a file and you can use that file to import the data, however old that system is that they're using. Okay, I think we've got a couple of minutes. One more question. Make sure I've looked through them all. What if my client's not interested in me adding value and they just want a cheap audit opinion and a quick audit?
Well, then this is the
maybe they're not the clients that you want.
That's a bigger question, yes. But when you're talking about a cheaper audit, at the end of the day, you have to do the required procedures. We have guidance. We have to follow the guidance when we do an audit. Unfortunately, there's no shortcuts around the admin work, but there are shortcuts around the substantive work. And these are those shortcuts. Dump in your data. Let the analytics do as much as it can for you. Reduce your testing. There's no reason to test 50, 100 transactions if there's no risk behind those transactions. Allow data analytics to start guiding you to efficiencies in your practice. If you spend too much time testing the substantial stuff and it's not really giving you good results, consider what data analytics can do for you.
Yeah, I think we're often scared to use substantive analytical procedures because we're not, we haven't satisfied ourselves that the risk level's low enough. So we just set it as high because we've always set it as high. We always do the same procedures in every audit. It seems like a shortcut. It seems like we're just saving time by doing the same as last year, but actually we can be saving some time. Okay, I think our time is up now, so I'm going to hand you back to Gail. Thank you very much, Michael, for all the fantastic insights that you've given us. It's been a great discussion, and I hope everybody online has found it as useful as I have. We'll hand you back to Gail just to wrap it up for us.
Thank you.
All right. Thank you both, Michael and Stefan, for an excellent presentation. And we hope all of you enjoyed this webinar. We want to thank all of you for sharing your time with us today. And also we want to thank Wolters Kluwer for making this event possible and enabling us to offer a free audit CPE credit to each attendee. You should look for an email from CPA Practice Advisor later today. It will contain the link to your credit if you earned a credit today. If you have any questions about CPE, you can contact me directly at gperry, Gperry, at cpapracticeadvisor.com. Also, if more than one person watched this webinar with you, you can request CPE for any of those people by sending the name and email address of each additional attendee to me at gperry at cpapracticeadvisor.com. As soon as we sign off here, you'll be presented with an optional post-event evaluation form on your screen. We hope you'll take a moment to answer the questions because we are continually trying to improve our webinar series, and this will be helpful to us. All right, we want to thank you all again so much, and our audio will end now.